Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
So after this upside breakout, the upside breakout sparked a bullish acceleration. So now the situation on the USD against the euro is that the US dollar is pulling back on its former resistance, which is acting now like as a support area, because when you break above a resistance, the resistance becomes a support. Okay. So in this, on this pair, we can identify a clear stop loss. Okay, stop loss will be set at 68 because you have a clear level, a horizontal level, was the low point of December 2008. And the overlap of October 2009. Okay, so you have the pair is pulling back on this former resistance, and this former resistance will be a strong and key stop loss pivot point. So as long as the pair will trade above this above 68. The outlook will be bullish. Moreover, you can draw a rising trend line, a tentative rising trend line, because we have only 2 points. But maybe if the consolidation goes slightly lower, maybe we will have the third point, and we are able to say that we have a bullish trend line on the RSI. But for now, just a tentative rising trend line. So the outlook, we said that the outlook is turned bullish. So on the US dollar against the euro, after this pullback, okay, we can say that the US dollar will go higher as long as 68 remains a support. For targets, where are the upside targets? We have an interesting horizontal resistance at 73. Okay, we had two rebounds on 73 on March 2009 and May 2009. So we can say that the market will see 73 on the upside. And of course, the first target will be the previous high at 70.35, sorry. So we have a clear stop loss at 78. First target will be the previous high at 70.35, and the second target will be at 73. Okay. If the pair break below 68, sorry, alternative target will be at 66.50, or maybe 66 in extension. But if we break below 66, we are able to say that the medium-term outlook on the US dollar has turned bearish. But for now, in the short term, it's bullish above 68. But if we break below 68, won't mean that the medium-term medium-term outlook on US dollar will turn bearish. So we can say, as long as 68 is support, we are bullish in the short term, and as long as 66 is a support, we are bullish in the medium term. So that's it for the USD against the euro. On the British pound, the ticker symbol is the Pt5, so it's the US dollar against the British pound. So in this chart, you can see that we had a double top in earlier 2009, which has triggered a bearish acceleration after the validation just there of the pattern. Very interesting. But for now, we can say that the pair is shaping a rounding bottom. Okay. Takes time, but for now, at this stage, looks like a rounding bottom. Okay. So it's bullish. The US dollar against the British pound, the outlook on US dollar against the British pound is for now bullish, but it's not our favorite configuration within all USD configuration. But we can say that we have a pivot point stop loss around 59.35, sorry. But as long as we have just below, the pair trades below 63.50, we don't have a clear signal to buy the pair. But we just can say that it's mixed to bullish on the pair, but we prefer to wait the upside breakout of 63.50 before to enter any long position. But for now, in the midterm, the outlook is bullish for us, above 69.35. And in case of the upside breakout of 63.50, the next target will be around 66.65. Okay. We can check with Fibonacci retracement, sorry. Okay, it's not very clear. But the 66 area represents 50% Fibonacci retracement of the entire decline of the US dollar from the start of 2009. So the analysis will be the following. We cannot rule out further consolidation in the short term, but as long as 59.35 is the support, we are bullish, and we expect our favorite scenario is an upside breakout of 63.50, but is not sufficient to enter a long position on this pair. So we prefer, for example, a long position on the US dollar against the euro. We are bearish on the euro against the British pound. So we expect that the euro underperform the British pound. That's why we prefer to buy the US dollar against the euro.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.